Mira Business FM. The sound of success.
It's the morning drive. Dubai's property market now, specifically Dubai Market Research, or a snapshot of research. More than 44,000 residential transactions recorded Q1 2026. But underneath those headline numbers, what is the story? We know that off-plan sales dominate the market. They're up more than 10% year on year, nearly, I think, just over 3/4 of all deals. At the same time, ready property transactions are perhaps cooling, signs of cooling at least. There was a sharp drop in March. Let's unpack this a little bit. Zacky Sajjad is the Director of Business Development and Client Relations at the property consultancy Cavendish Maxwell, and he is here. Good to see you.
Good morning. Thank you for having me.
You're very welcome. Good to have you back. So what's driving demand, Zacky? Where's the market heading next? What do the latest numbers mean for investors, for developers, for buyers? We've got a lot to talk about.
Yeah.
I'm not going to jump into that immediately. Headline figure is 44,100 residential transactions recorded in Q1 of this year. So to start with, the obvious question is, what does that tell us about the overall kind of market strength?
Look, I mean, it's still a very positive market in Q1. Now, obviously, we had an interesting month in March, but that being said, we still recorded over 12,000 transactions in March, which, I mean, that is pretty phenomenal. Now, there is, with off-plan sales, a 60 to 90-day period before the ACUDs or the sales purchase agreements, the SPAs, get registered. So there is likely to be some overspill from earlier in the year being registered in March. So until we have seen several months worth of data, it's very difficult to fully analyse where we're at, sort of year to date, given the sort of recent conflict here, but overall, very healthy in terms of the number of transactions. Obviously, still, as you said, a lot of off-plan. We can get into a bit of perhaps why we think that the ready market is cooling somewhat. And I think that's, always with these things, it's a number of factors. Number one, brokers and agents are heavily incentivized to sell off-plan. Mm-hmm. They get better commissions for selling off-plan. So that is what is pushed. Number two is that, if, you or I want to buy a home to live in, we need a 20% deposit, before we can only borrow 80%. So that's quite a serious chunk given where the market is now at on the value of real estate these days. So, a lot of people may struggle to get that 20% deposit plus the associated costs that they need in terms of registration fees and often the sort of any brokerage fees, etc., that they may have to pay. So, with that means that people are looking to perhaps stagger that. So an off-plan transaction allows them to follow a payment plan. So you don't need to put down as much money. There are just some of the reasons why we're probably seeing a bit of a slowdown in the secondary market.
I've been wondering that, I've been wondering if we might see in the not too distant future a range of maybe different, maybe more incentivized products where you don't need to put down, as high as 20%, the 10% mortgage, 5% mortgage, for example. I don't know, but I've been wondering that for a while. Do you think we might see something like that going forward?
I mean, look, in maturer markets, that is definitely, the norm. If we look at the UK as an example, it's usually 10% is the deposit that you would need or what you would need to sort of get a mortgage. Sometimes a little bit lower. I think where Dubai, the UAE have done a wonderful job is all these sort of external factors that have affected the real estate market here, be that the global financial crisis, be that, the sort of price of oil collapse and the Arab Spring that preceded it, be that the pandemic, and now, obviously we've got a new, regional geopolitical tensions that, it's a bit early to really gauge where we're at with that. But all these external factors, the authorities and the government have done such a wonderful job in taking real, learnings from these. And I think actually having a healthier LTV of 80-20 is perhaps not such a bad thing. You know, you've got a good chunk of equity in that property, and you're spreading the payments over 20 years usually. So I think, look, who knows in terms of where that may go. I would perhaps suggest that, you know, eventually we will get to slightly lower LTVs inevitably, but I think right now, given where the market is at, I'm sure that this is not at the forefront of people's thinking. It's sort of working. The volume of transactions show that it is. So.
I mean, let's look at off-plan for a moment, because off-plan sales are more than 10% year on year. Off-plan properties, something like 75% of sales. I mean, it's 3/4. It's huge. We love off-plan here, don't we?
Yeah, and that's, as I said, I think that's as a result of several factors. Obviously, if you look at Dubai in particular, Dubai has become a metropolis now. You know, those of us that have been here a long time, you know, we remember when you could drive from one end of the city to the other in 15, 20 minutes. Not really the case anymore. And obviously,
nowhere near the case anymore.
Yeah, and so look, there is a, you know, as per the sort of 2040 urban master plan, there are these kind of 5 urban centres. You know, the traditional kind of Deira and the Creek. Then they kind of expanded along Sheikh Zayed Road. Then they started to get towards your, you know, your sort of reclamations in terms of the Palm, looking at the Marina, JLT, Jebel Ali, and now, you know, you've got this sort of the Dubai South master plan, which is just enormous. Yeah. You know, the world's largest airport under construction. You know, if you look at that alone, I mean, the aspiration is to cater for 200 million passengers annually. That's double that of DXB currently.
I was going to say, I was just doing the maths in my head there. Even I can do that.
Yeah.
It's a huge plan.
Exactly. So, you know, and so there is these visions, there's these long-term visions that that Dubai has, that the authorities have, that the government has, which they want to, you know, they want to sort of push this. So as a result, there's always going to be a lot of off-plan. And even if we look at years, perhaps say from 2014 to 2020, where we weren't seeing what we have been seeing, say from 2020 to 2026, where the market was growing month on month in terms of, you know, values and volumes. We were seeing sort of slight declines between 2014 and 2020, but yet, you know, the big wheel kept turning. We were still delivering. We were still sort of developing, and when we, you know, some people would say, well, I wonder why that's happening. Then you look at what happened between 22 and 26, and the way the population grew. Suddenly, you know, we're all paying astronomical rents because, you know, there's not enough supply in the market. So, you know, this is part of it. So the vision is very much a long-term vision, and so off-plan therefore dominates.
The other thing about Q1 is, I mean, the headline's great, 44,100 deals. So on paper, that's a booming market, isn't it? But when you look at the March data in isolation, in terms of the level of transactions, there's a slowdown compared with the same time last year, isn't there? So I'm wondering, is that seasonality? Is that really down to the uncertainty?
It's, again, a bit too soon to really tell. I think the fact that we had Ramadan and Eid, you know, sort of during this period, which often we see a bit of a slowdown, especially where Eid falls. The last couple of years, not as much during Ramadan, but when Eid falls, often you have people taking the full week off. You know, people try to utilize that sort of public holiday to take the week off. So it's a trend that we've been seeing. So that could be a factor. Obviously, the regional tensions could also be a factor.
Is the ready market cooling? Is it hitting a price ceiling? How would you characterise it?
I'd say it's a bit too soon to really tell at the moment. What I would say is,
I should have brought you the crystal ball back.
Yeah, I know. Look,
terrible.
What I would say is, we have to look at it in perspective. You know, if you've bought something in Dubai any time from, say, 2019 up until 2024, 25, you're you've done well out of that that property purchase,
That's
right?
fair.
So I think we're at such a high base. A lot of people have been speculating for a long time now. I would say for the last kind of 12 to 18 months about when the market is going to sort of peak and when we're going to see some sort of correction and what that might look like and when that might be. A lot of discussions. I mean, we had a discussion previously on the supply demand and actually when we look at what was launched on off-plan last year and the start of this year, it's almost every 13 hours there was a launch. So you look at all those and what is under construction, and we've never quite hitting the where we expect to be. So last year, I think we had just over 20,000 handovers, which is phenomenal, incredible. But I think expectations were sort of much higher at about 45, 50,000. This year, at the start of the year, there was talk about 80,000 under construction units being handed over this year. I don't think we'll reach that, and not because of logistical constraints as a result of the geopolitical tensions. I think it was just a fact of there's not enough contractors, subcontractors, consultants in the market to deliver that product in those timescales. So I think all these sorts of things mean that the supply demand imbalance is still perhaps there. So where we're at in terms of the market, I think we'll see probably Q2 will be a real sort of telling sign of how things have settled, during this ongoing period with these tensions.
It's kind of it's a tough problem to solve, that, isn't it? But it's a nice problem to have.
Yeah. I look at, as I said, I think you're talking about an illiquid asset class in real estate. Anyone that's purchasing real estate, my advice would be you're buying for a medium to long term view on that. You're not on the stock market, where things can react very quickly and you can see change. It takes time with real estate. So the way I would always advise anybody is to say, if you're taking a medium to long term view, usually you're going to be okay. And it depends what you're buying. If it's a home, well, I mean, you're saving on paying rent anyway. So by paying a mortgage and you've got something that you own. If it's an investment property that you're buying, well, it's generating an income for you. If you've got that tenanted. So, I think this is, and if we look at a lot of the profile of buyers for Dubai off-plan, it's a real mixture of international buyers as well as, people within the market. And those international buyers, if we look at the profile of those international buyers, they're generally from the region. The volume play. The volume play is 1 and 2 bed apartments, and the volume nationality of buyer are from West Asia, the Middle East, and East Africa. So within that sort of 4 to 5 hour flight radius of Dubai, again, regions where this situation, these kind of geopolitical tensions are not unusual.
It always amazes me. You have conversations with people, and the conversation is, I've just bought some property. Oh, what have you bought? I bought a floor. I bought 10 apartments. And it's as though that's a normal conversation to have.
It'd be great to do that if you can do it.
Oh, I wish. I wish that. So let me ask you this. Off-plan sales, something like 70%, 75% of deals, right? In your years at Cavendish Maxwell, have you ever seen the market this heavily weighted towards unbuilt property? What does that tell you about investor appetite? Going forward a few years, 2028, 2029.
Yeah, I mean, look, this has been the norm for several years now. The sort of off-plan dominance, and I think that's happened as a result of the market sort of booming, if you like, pardon the pun, but going really, really well. So so that's kind of normal. If you look at where we're at, we've got a lot of supply going to be coming to market over the next 2 years, given the launches that we've had. I think expectations at the start of this year was roughly around 80,000 units to be handed over this year. Yeah. I don't think we'll hit that number. I think it will fall below. But that being said, that whatever we fall below in terms of handovers is going to kick into 2027, and then obviously the 2027 numbers will kick into 28. So I think we are going to see a lot of stock coming to market across the city. It would be interesting to see the absorption rates. I mean, if we take a 20-year view, I looked at population data for Dubai from the year 2000 to the year, I did this in December of 2024.
Okay.
So I looked at a 24-year view of the population growth of Dubai, and averaged out at about 280 to 300,000 people a year is where the population grew. So if you extrapolate that over to 2040, then my goodness, we're going to be at nearly 6 million people in the city.
I'm getting ready to be knocked back.
So you're going to be at nearly 6 million people in the city, and this is through global financial crises. This is through, regional tensions. This is through the pandemic. This is where, Dubai just keeps attracting people. And unsurprisingly, it's a wonderful place to live. And so people are drawn to it. So when you look at that and you think, well, if we're going to be getting to that population in 15 years, where are these people going to live? So this off plan and this boom will be required for what is to come.
Let me ask you a little bit about the secondary market then. March dip in ready home sales. Is that a sign that end users, families looking for homes to live in, are being priced out a little bit?
Quite possibly. I think it will be a mixture of factors. That could be one of the reasons. Certainly, if I were to look at a villa, a detached villa, say in the Meadows, and what you'd be looking to pay for that today would be probably in the region of about sort of 15 million dirhams, 12 to 15 million dirhams, depending on that property, its situation, etc. So it's when you look at that as an example. So yeah, there's going to be an affordability issue.
Sure.
In addition, you also, if you look at it, there's not that much supply, right? So if you are looking for a Meadows villa, take that as an example, there's only a certain amount, and if those current owners aren't willing to sell, well then what other options have you got? So you start looking at okay, maybe I'll go off plan. I think also, as we discussed earlier, that the LTVs, the loan to value, getting that deposit together, getting the additional sort of amount of money that you then need to pay all the kind of associated fees, that could take up to 25% of the value of the property that you need to buy. On an off-plan property, you could probably get a payment plan. Some developers will probably be 5%, or 5 to 10% on, on sort of agreement, and then it's staged over 2, 3, potentially 4 years. So, and then you could also now, with certain banks, get a mortgage for your property that's under construction. So, that helps you build towards that deposit. So I think it's a mixture of those factors. And I think also, if you look at the city and in its sort of transformation, it is sort of shifting southwards with, a lot of eyes on what's happening around Dubai South, what's happening around the Expo site. There's a lot of quite attractive communities being built there. So I think people are sort of looking at that. It's a bit closer to Abu Dhabi. We're seeing, a lot of people, from both cities, kind of working in both cities and living in the other one. So as a central location, and even on the other side of on the Abu Dhabi side, if you look at what's happening around the sort of Gantu area and some of the developments that are happening around there, also they're quite attractive. So I think this is all these kind of multiple factors are playing into this, and that's why you're seeing the data that we're seeing today.
That's why we're talking to you as well. How do you keep up?
We've got a wonderful team. Big our research team does an incredible job of sort of not just extrapolating data, but also interpreting that and then putting that into the reports that that we put out there. And also we've got a fantastic base of valuations as one of our core service lines, our consultancy advisory service lines, and our built asset consulting. So with those, all these insights then add to what we're seeing from market data.
I had so many more questions to ask you, but we're out of time, unfortunately. So come back soon. Zacky Sajjad is the Director of Business Development and Client Relations at the Property Consultancy Cavendish Maxwell. Good to see you.
Thank you. Thank you.
This is Mirror Business FM.